Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thanks, Marty. Thanks, Rignu. And how we doing in YouTube? Can I get a check over there? Yeah, thanks, Fred. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis in the intraday developing time frame. This is about day trading, though everything you see here can be applied to any time frame, whether it's swing trading, options, or any market. This is the basic function of how the market operates, why it does what it does, how at times you might get in alignment with it. The Trader Lab is a group of like-minded traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading. We have traders that are just newly minted, if you will, and then old dogs. And I guess I'm an old dog. I've been trading 45 years, both professionally and otherwise. I started trading when technical analysis versus, via indicators was in its infancy. So I came from a classical bar charting background, which is measured moves. And then as technical indicators came into the public space, I was at the forefront of that. I actually shared an office with George Lane. He created stochastics. Oscillators were a new idea, if you can imagine. So all of this is part of what I went through in my development and understanding of market mechanics. And I certainly went down a lot of dead ends, thinking that the solution lied in the indicators and the timeframes and getting the right mix. And I went so far as to build trading systems to try to do it better. And I always kind of kept coming back to the same place where I would be trying to fit the market into the past, where the market, while the past has resonance in the marketplace, you can't put a box and then put the market in the box and think it's going to behave a certain way, because the market's dynamic. It is continually responding to new inputs. The inputs are, external events and internal events. Internal events based on participant behavior, and then external events, news, etc. And the point of the marketplace and why it exists is to try to figure out what something is worth. So it's going to move to extremes on both sides. In other words, what's too high, what's too low, and then what's a fair price. And the auction or the volume profile represents this behavior, because a fair price is the same as when you go to store and you shop and there's high volume there. But when we move away from a fair price, if we get too high, we're going to run out of buyers and the volume drops off. Less buyers buying any product, whether it's a can of tuna or an S&P or an NQ. It's all going to be the same. Less buyers pay too high a price if they perceive it. Then if you run out of buyers, it's going to rotate back and try to figure out what's too low. Now, the other part of this for day traders is this rotational element is happening in all time frames or fractals. So in the Trader Lab, it's about understanding market mechanics. How does the market work? Why does it do what it does? How can you get in alignment? And then I've shared 60 PDFs of structured trades that you could use as the basis or template that you can reverse engineer. And then, of course, there's a Trader Lab community where these traders have come together to leverage their experience, and it's no cost for this. And there's a link in the bottom of YouTube if you want to visit Trader Lab, and there's a library of webinars, there's the PDFs, and of course the community. Just want you to know that. Now let's get into the market. And thanks again for visiting the Trader Lab. Please give a like. And feel free to visit the Trader Lab. I'd look forward to meeting you there. And so would the other group of traders. It's a very dynamic community. I'll show you a little shot of it later if I have time. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable. Whoa. Hold on a second. That's something just going on here electronically. Sorry. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get there, we'll talk. Joan Rivers used to say that on Johnny Carson, which is probably before many of you were born. Just saying. By the way, this is what the PDFs look like. There's 60 of these, and they talk about specific trades. A lot of these are actual trades I've taken. Others are just screenshots. You know, for example, here you can see, you know, where the scale was, where the short was. And a lot of these are broad strokes. There's a lot more to this. One thing about trading, we tend to think it's very complicated, which of course, that's a good way to describe it, but it's really not complicated. What it is random. So retail traders, the typical retail trader comes into the business and they don't really know the business they're in. They think it's a software package and indicators and all that, you know, good stuff. And you can have a lot of fun with that. But the business is not indicator based. It's really behaviorally based. And then you need a methodology to interpret what's going on. And that's why we gravitate to indicators. I don't use any. And the reason is quite simple, actually. I wanted to minimize conflict, ambiguity, thrashing on my part, and especially the conflict. So I found that, you know, whether you're using an indicator or doing this, we all take stops. So that part I accept. So I accept I have overhead and cost of production. Then what can I do differently than other traders? Well, I can learn how the market works. Instead of depending on an indicator, I can understand market mechanics, which my indicator doesn't do for me. Then I can also understand order flow. So I can actually be here and then make timely determinations or decisions, if you will, based on understanding the market mechanics and the tools of order flow. That gives me the potential to timely execute, enter, exit, better risk management, better opportunity to get risk neutral. And yes, I still take stops. So do you. So we all take stops. Overhead and cost of production, we have to get over it. We are in a gaming business, and that's all I want to say to you about it. It's a gaming business. So that means statistical probabilities. I've got to make one adjustment to a chart here to get some lines off, and I'll be right with you. And if you have questions, please post them. I'll come up for air, and I'll be glad to answer your questions. Please give a thumb up if you're visiting on YouTube. Okay, RTH open. Now, let's look a little further up the food chain here. We were looking yesterday, we had this level yesterday was our target. We were looking to fill the gap from when we gapped out. And that gap, I think, I have to go see where exactly it is around 61.10, 61.11, somewhere right here. Well, the ETH high tested this key level. Now, yesterday, that was the target. If you remember, you know, and I suggest you come to Trader Lab if you want to watch these streams because they actually fit into each other. This was the target yesterday, and this is yesterday's high. So, too high, maybe. You know, okay. Yesterday's high. So we took it out in the ETH, and then we have the overnight volume point of control. The overnight volume point of control is that retail price, highest volume in the ETH. So potentially, we have filled the gap. Don't know. Yesterday's high. Retail price is right under yesterday's high. It suggests we might come back up and check it at the moment. Then we have the naked volume point of control. This is the highest retail price from yesterday. So yesterday's retail price is here. Just think shopping. You already understand this because if you go to the store, you're a shopper. This is shopping. That's all trading is. You're shopping. You know, buy low, sell high. Remember that? Well, buy low, sell high, buy low, and everything in between. So this might be too high. This is the retail price. So we open RTH open right here. Now, here's what I know. I have a high probability of testing this. I have a high probability of testing the overnight mid. Yesterday's high, over an 80% probability, past performance not indicative of future results, and ETH high. So these are all high probability targets. Now here's the other piece. This is where it gets interesting, of course, because we're in a random environment. And take a couple of notes. We're in a random environment. Now there's another piece to this. Let's think about it. What happened yesterday? Market went up. What happened on the day before? Market went down. Everybody jumped out the window. The market got short, and then the market closed up on the high. What happened yesterday? The target down below is around 26. That was the low of the day. That suggests to me that we found too low. However, what's the composition of the market from yesterday? Longs. Write this down. The market goes up to go down, and the market goes down, go up. Now, it may sound like the most ridiculous thing you've ever heard, but what it's really telling us is whichever side is vulnerable. So in other words, if the market goes up, there's sell stops under the market. The market goes down, there's going to be buy stops. So when the market gets too low and you got the market short, and then we get those short covering in there and we get new buyers, the shorts become the buyers and it gives you the acceleration up. Okay. Now we have the opposite condition. We had the longs yesterday. Market's rocking away. This was the target for yesterday. That's as far as we got. Life in the fast lane. And then what? If that's too high, then we have longs in the market and we're opening down here versus yesterday's high. What would you do? Might you maybe get out or take some profit? Long market goes up to go down, market goes down to go up. So right now, yesterday, market went up. What about today? Let's see. Maybe it's going to go down. Let's go take a look. So first level that's important is this. This is the retail price. Now, how does this auction work? You know, what is this? Auction market theory. You expect to see Igor in the corner. But really what it is it's the basis of the market. It is the truth of the market. In other words, the basic process that's taking place in the marketplace. It's the auction. And it's because the idea is the participants are trying to determine what's too high and what's too low. It's shopping. So if this is the retail price from yesterday, let's use the logic, and it's where the most volume went off, and I open at the same place, that is telling me potentially, right, we open right here, that we're at a fair location and that we can trade both sides. That's the first thing I know. And I know statistically, I have probabilities of going up because yesterday's high has over an 80%, and the idea of taking out yesterday's low seem like it might be a little far-fetched. So that's why I'm thinking longs at the open. So let's watch. So right here, we get our open, we move up. This is called VPOC migration. So right here, I'm going, okay, this looks like a long. I'm just going to tell you now, and this is, now what I do, and I'm not saying that now, believe me, I take stops, I get on the wrong side, whatever happens, happens. Kind of used to it at this point, doing this 45 years. That's trading. There's no perfection, and you're not in the business of predicting. We are in the business of aligning. So right here, I'm looking and I'm thinking this looks like it's going to go higher. I know this is important right here. And for me to go higher, I would really like to get over this. So let's watch. Now this is a variable high volume node. And I made these terms up when I started doing this. Nobody that I'm aware of was doing it like this. So I had to make up terms and process. And this is not something I developed over a weekend. This is years and years of work and dead ends. So right here is the retail price. Let's look at this in the order flow. Here is a retail price. Chop chop is an auction. You have a passive seller there, and you've got your buyers here. The market breaks high. You see the buyers. Now I'm in order flow. Let's just watch, and I'm going to start putting these elements together. Right here, I have my mid and my VWAP. I'm over here. Now, what creates this yellow line, this is called the developing volume point of control. And what all a point of control is high volume. And if you think of this as shopping, and most of the volume is done here, this is where the fair price is. But if the shoppers leave the store, then maybe this is too low. Maybe, all right? And we come up here and we chop some more. Well, at the RTH open, there's no volume, so this thing starts counting at 0. So right there is the most until we leave it. Now we start this up here. Well, if there's more volume up here, then we have rejected this price. Just follow the concept as too low, and now this is the new retail price. Let's watch. VPOC migration, it shifts up. So too low, retail. Now watch. I break down. What does this say? Too high. So I have too low, think of it like support, too high, resistance. Break. Now right here is support. Let's just watch the behavior. VPOC migration and mid and VWAP. What does that tell us? Let's come back. Too high, too low. VPOC shifts down. New retail price. So what does it tell us about this price? It's now too high. So let's mark this. This is called narration. And this is what I do. I narrate the market. If I don't have an indicator, what's my indicator? How about it's me? So I'm not passive. I'm actively involved. So now I have this resistance. I have mid and VWAP. I have this is the fair price, and that's way too unfair. Mid, VWAP, directional market, resistance is here, resistance is there. Let's just watch. This is a potential short. Let's just watch the behavior. Now remember where these levels are. I've got one here, the variable high volume node, and I've got one up here. Let's watch. This is a short in the Trader Lab right here. So you have a short over here. You have a short here. You could be taking a short here. So this, too fast to respond for most normal people. Resistance is there, too high, break low. I get a sweep. This suggests counter rotation. I come back up to my resistance, which is right there. Alignment, microstructure. I'm going to take you down into what you guys think of as time frames. Let me just draw a little line. You're going to find this interesting. Notice this. Notice this. These are all Trader Lab structured trades. So you have a potential. Now here, this ran away from me too fast. Because by the time I blinked and I spit my coffee on the screen, the thing was already moving. So I didn't get short here. I mean, I looked at it and I said, you know how it is in hindsight? Yeah, you should have got short there. Yep, but it was too fast for me. Because this is like, let me see, where we hit this level, which is a level for action, you might say. The market, it was 8:30 and 24 seconds. So this is like 20 seconds. So I really didn't get this. So in here, I didn't get it. I could have taken it here. I didn't do it. I got this. I didn't do it. I'm just saying I was really kind of slow on the uptake this morning. But I did recognize it, and I said, okay, I got to find a place to get short. So what I do is I go, okay, I got to wait. No FOMO. Got to manage that. Missing out. Oh my goodness, right? There's my sweep. This sets up this. So now when I come back here, this is a structured trade. So right here, boom, your short entry is here or up in here if you can read it. And we're leaning on the volume there. Buyers right here, you see these buyers? They are absorbed. The sellers are here. Notice where we come. We come right back here. A little stop pick. Thanks for playing. Another short. Watch. ETH low over 90% probability, past performance not indicative of future results. Now, let's keep watching this thing. Where does it come back? Over here, another short, a big sweep down here. Reversal typically comes. Watch. So you get the sweep, you get the reversal. Now you come back to VWAP in mid. Now, so far, we are still in a directional environment. So this is another potential short. Let me show you the trigger. This is all Trader Lab methodology. It is not complicated. If you're indicator bound, this will be complex to you because it's almost like you've probably never understood what's happening because you've been working on having your indicators translate. If you want to deploy indicators, I think you need to understand how the market works first and recognize behavior. And then if you have indicators, throw them all away except for the ones that actually align with the condition. Trader Lab is about helping you understand what's something called context. And currently the context is rotational, south side oriented, so going down. Now, it doesn't have to stay that way. It will not stay that way, but until it changes, it hasn't. Let's come back here. We had this big sweep over here. We are underneath the ETH low. We have high volume over here and over here. So what does this tell us here? Let's look at this little thing here. This is a consolidation, right? Sellers are here. Buyers are down there. I'm going to draw a little box around this for you so you can see it. And all this is structure. And if you want to think about what you're doing, when we're trading, we're actually working with structure. And what we want to do is, if we see structure, we need to understand what it says. In other words, the language. This is too high. This is outside edge of this structure right here. So you got too high support. If I break under here, I've got this, and whatever happens, happens. And this is a potential target on the outside over here. So I won't go into why. You have to come to Trader Lab, but there's your support there. Let's watch. See it? So if you're in Trader Lab, this is how this would work. If you took this short, you would know that your support is in here. And why is that? I know you're going to ask me, Tom, how do you know? Well, first of all, I don't know anything. So let's take knowing off the table. But I know some things. What I know is this is an auction. Sellers are here, buyers are here. You see the red bubbles? That's delta. Why didn't the market go down when you see aggressors? Because who are the aggressors? Sell stops. Stop an iceberg detector. Very cool. Who are the sellers over here? Sell stops. Thanks for playing. Broker sends you a gift basket. And who's buying here? Icebergs, limit orders. Icebergs. So what you have is icebergs buying this outside edge. That's why these guys are getting absorbed. And then when you come up to the other side, you have exhaustion up here, only 15 coming out, 18, 1. It's exhausting. So we're running out of buyers over here. So that suggests to me that while we're in this, support, resistance. Now, when I break out of it, now I know my volume is here and I have an outside edge here. So if I get short here, I have to be thinking about this level, which is there, this outside edge of a distribution, the high volume, which is right there, and then falling out the bottom, but I know support is here. So if I get short here, I'm trying to scale here. And I could only get this far and have it blow up. That's life. And if that's your trade, that's what you do. Notice the pullback. So we get the trigger, the test. This is Trader Lab trading, and this is a trigger. You would isolate structures. You would learn to read this. Is this a trigger? Chop, chop, chop. There's the high volume, but I break high. No trigger. VWAP, mid. Chop, chop, chop. Am I breaking high? No. I break low to my support, and now I pull back. So right here, I'm leaning on the volume. The shoppers in this store, this is how I look at these. I had to relate to it somehow, you know? So since you go to the store, I go to the store, I know in this store for S&Ps at this moment, and that's why I don't use time frames, because the auction is not time constrained. It's just participant based. This is too high. Break, trigger, short here, and then back to here for the scale, and then wherever it goes, it goes. So there's your scale, and you get taken out. Now, next trade, where is it? It's right here. Variable high volume node. I'm operating in multiple time frames. So I'm trading what's called fractals. So the developing time frame, this whole thing here, I'm using it, but I'm using microstructure inside of it for triggers, using the same concept, except in a micro. So what was this? This was our retail price, and it was too high. Remember, support resistance. Now the retail price is here. Let's see what happens when we come back here. And remember, resistance is sitting here. What is this? Let's look. I'm going to put a little line here because you can see where this was. This is already on the chart before we get there. It's right there. So here's the trigger. Now, when it's coming up, I have no clue. I'm the clueless. Very proud of being clueless, because that means I'm not predicting. I'm not ignorant. I just don't know. Could go here, could just keep going. What do I see here? I see my buyers, buy stops. So those can be these guys. We don't know. Now, right here, I'm at my level. No clue. Buyers are here. Buyers are here. Buyers are here. Going to the moon, Alice. Sellers are there, but I don't know that. Break low, break high. Liquidity comes in here, and right here, still no clue. Buyers are in control. Buyers are here, and buyers are there. Micro structure, you can see it over there. There's the sellers. So now I have a trigger, and let's put a little box around this, like I did on that big consolidation down below, and let's just look at the structure. Remember, this is called structured trading because we're letting the auction or the participants tell us what something might be worth. And what this does, this here, brackets this distribution. Distributions have a low volume outside edge, a high volume, so you have low volume there, looks like that, low volume, and then you have high volume, which is that. Well, the high volume is the retail price. So in the store down the street, you know, where you like to shop Saturday night for your pint of ice cream, this is too expensive. I don't know it until I leave it. Now the shoppers have gotten in the car and they left the store. So we all go motoring away. But you like to shop down the street. You don't want to have to get in a car. So the resistance is really here, right there, actually. So when we come up to this outside edge, I can enter here or here, and my stop needs to be above there or above there. And then I'm going to here. And what would happen? You'd get a scale. I'm showing you these are just structured trades, and you would get taken out. Okay? So far, you're getting, now, once we come across, it sets up a different condition. This condition is called mean reversion. Now, let's look at what we know. We know this is too high, and now we have moved away from continuation trades to a different condition. Once you come through all of this, now we're going to squeeze everybody out, and we're going to come back and come up. So let's look at where we come. Up here. And what do we get over here? Now remember, this was too high. We come up here, it looks like we're going to continue. What is this structure right here? Let's look at the high volume node, and it's a consolidation. Now, this is again where order flow really shines. Let's look. Now, the other part about all this is nobody knows, what's going to happen and where. Let's just mark this out for you. Whoa, come on. Okay. So market's going up. I got liquidity. It's going to the moon. Whatever it's going to do, it's going to do. Part of the joy. I see. Now, let's look at the order flow. Buyers are here. Sellers are there. I break through. I got a buyer here. I got my delta here. That's an aggressor. Sell stops. And my buyers are here and here. I break high. This guy's under the bus. Thanks for playing. He gets a coupon to the buffet. Now, we're above the seller. Buyers are in control. 185 stops coming out. 300 selling icebergs up here. Now, here's another little something. These are just hints, and you can learn this in Trader Lab, and there's no cost for the lab, the chat, the library of webinars, and everything else. Let's look at this. I call this stop divergence. It's the only thing I use from my days with indicators, since I don't use them now, but I did learn a couple of things, right? Learned a lot using indicators. I also learned the problems with them, and then I determined to get a solution. So I found a solution to overcome the problem. Not eliminate randomness, but certainly, let's just say, have a better approach to it for me. So the buyers are here. Now let's look at stop divergence. As I'm coming up, there's 185 stops coming out. You see it? Stop an iceberg detector. Now I come up here, and I got buyers here, but there's only 4 buy stops. 4. I come up over here. What is there? 4 buy stops. I come up over here. What do I got? 1 buy stop. Does that tell you something? So possibly, and I only can say possibly, I'm exhausting. Who are the buyers? Is it longs initiating, or is it stops being squeezed out? Aren't they a different kind of buyer? Do you think it's important to be able to determine that? And then if you get that input, instead of just seeing price, you know who or what type of buyer it is. Does it make a difference? Well, it does to me. But the buy stop is not an initiator. Yet Delta measures it the same way. So by seeing the stops, I'm getting an edge. So I can see what I call stop divergence. You remember divergence, one of our good buddies. So I see stop divergence, and I have no clue right here. Remember, buyers are in control. Buyers are in control. I have nothing that says right here, I have the divergence, I got the icebergs, and I'm clueless. So right here, it's all buyers until there. Now the sellers are below these buyers. I come up here. This is my resistance now. I have my buyers here. So I have the seller, I have the buyer. If I break below this buyer and I see the seller, it's a short. It's all here. And then this is resistance, and my stop will go up here. So I could be short here, and I'm within my risk parameters, and then I'm coming back here to scale. That's called mean reversion. Let's look at it. It's a long-winded explanation because that's what's going on. And the point of this stream is to educate. Oh, we talked about this in Trader Lab too. Show that to you. So the scale is here. And let's look at where our support is. You do remember this, don't you? Now, I don't know where it's going to go. I do know that if this is an outside edge and now we're going to potentially be rotational, this is where I'm trying to go. And then it's out the bottom. But look where I come. I come here. Why is that important, you're asking me? Because it was the high volume in here. right here. Does that make sense? And now I bounce off it. Now, here's what you can do with this. What I do is I use these levels for targeting and trade management. So they're like support and resistance to me. And in trading, there's no precision and certainly no prediction. So I know, but the big thing for me is this, because once we get rotational, the context then is two-sided trade. But because I rejected this twice, then it gives me a downward skew. So then the leaning, you might say, is shorts. Primarily, I can trade both sides. We have this conversation in the Trader Lab. You could get long down here and coming back to here and rotating. Now let's look at the structure again. What do we know? Let's talk about what we know at the moment. Again, we're not in the fortune telling game. We're in the alignment business. We need to align with what we perceive at the moment as the current condition of the market. So what do we know? This might be too high, and this might be too low, and we just are coming across the range again. So it's going to be rotational trade. As soon as you're coming across the mid, the VWAP, the VPOC, this is called balance. Balance is a mean reversion configuration. So it's like if you're in the Trader Lab, you're going to like open your book and you say, okay, we were directional and I'm taking continuation directional trades. Now it's come across the range and I'm no longer directional. I'm now in a different condition and I pull out my trade plan for the specific condition, which is called mean reversion. It's outside in trading. You don't know until after the fact. So you will get out of alignment and take a stop or whatever happens when the condition changes. It's just the way it is, and you have to get over it because you can't predict anything. It's part of the randomness and the changing behavior of the auction. So we can figure it out. And right here, as far as we know, we're going to keep going, right? So if not, if we come across, then we're going to come back outside. So now let's take a look. But let's look at what we know. This is important. Let me show you this. Now, this is all market profile, auction market theory. What is this then? This high volume is a price where this high volume represents the shopping. And if the price is too high and we run out of buyers, they leave the store. Then remember at the top of the stream, I said the purpose of the market is to figure out what's too high or unfair, what's too low. And if it finds too low, it can rotate back to try to figure out what's fair. So it comes back to the mean. That's the high price, the high volume price. Right there, it's the highest volume at this time. So it rotates. But then it's going to come out the other side somewhere. And part of that has to do with the shorts that are in this leg become buyers. The buyers in this leg will become sellers. And remember at the top of the stream, what did the market do yesterday? The market went up. What happens to the longs? If we don't continue, they become sellers. What happens to the shorts in here? They become buyers. What happens to the longs in this leg? They become sellers. It's all the same. Once you understand market mechanics, you can apply it to any time frame or fractal. And in the intraday thing, to me, there is no time. It's fractal. So what happened here? What do we know about this? Well, if that's too high and I rotate back outside, and I think we talked about this one in Trader Lab. Now, this is interesting because this is a structured trade. You can see the trigger. However, let me tell you what it's not. And this is very important. In Trader Lab, what I always suggest is we are learning to speak a foreign language or to play a musical instrument. You have to develop unconscious competence. And part of the reason I draw these lines and put the stuff on here is it's important because based on how the market actually works, this was too high a price. Now, I don't know if it's going to stop here. That's not what this is for. This is to say these are areas of potential behavior. And right here, I see the buyers, right? So I'm not doing anything here. And then I come up here and now I chop. As soon as I go into a consolidation, I can put a little box around it because now I know we've met our sellers up here and my buyers are still active over here. So if I put a box around this, I'm just going to do it so you can see it again. Now, when I'm trading, I'm not drawing all these boxes. I draw some of them. But let's look at the structure. This is what I want you to learn in our visit today. Passive sellers are here, right? I only got 2 buy stops going off here. There's our little stop divergence thing we were talking about. I have limit iceberg selling. You know, not a big deal, but okay. So I got my sellers, but what do I have over here? Let's come down here. Too low, buyers are here. Sellers are here. I get above the sellers. Sorry, Charlie. Remember Charlie the tuna? Buyers are here. There they are. Wow, going to the moon, Alice. Then I pause. Passive sellers are here. Buyers are here. Huh. Going to go chop, 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 and it's either going to go up or down. If it breaks down, I have now found potentially too high. If I come back, this is a short. Now, in the conversation in the Trader Lab, and you're all welcome to Trader Lab. You can use that link if you're interested in the bottom of YouTube. There's no cost. This is a short. Now, let me tell you what it's not. It's not qualified. Here's why. This is mean reversion. This is the mean. If you get short here, and you'd have to put a limit order here, or you don't have the stomach for that, which I can understand, you're going to sell it as soon as you see this. You're going to get filled here, and your stop has to go there. Well, I don't know. You want to risk 3 points, and this is your target. So for me, and this was the conversation, this trade's not qualified. But what you can learn from it is this is a trade. It just doesn't have the range. So this has all the pieces. So when you're in the Trader Lab, your job to develop an edge and a vetted trade plan, it's to continually narrate so it becomes second nature. So you're sitting over here and you're looking at this and you go, okay, there's a consolidation. Why do we have consolidations? Because it's a pause and it's a test. That's really what's going on. These are consolidations. What happened? Well, too low. Break high. What happened here? Break high. Held the support. See how it works? Break high. What did we do? We held the support. Break high. Chop, chop. What did we do? Broke the support. Tested it. Tested it. Broke it. There it is. Short. Okay? I'm just showing you triggers and context. So let's look. Where do we come? Remember where the trigger was? It was there. Are you guys with me? How are we doing so far? Do you have questions? How are we doing in YouTube? And how about Discord? Please give a like, by the way, if you're in YouTube. It's always nice to be liked. December's question was, do I calculate the probabilities that each important level has? It's not about the levels. It's really more about the condition and the locations. So if I know, I call these VHVN continuation trades, and I'm also overlaying it on this. So this is my outside edge over here. So if I come up to these levels, now there's high volume sitting there. See that high volume node? That's resistance. And if we're above this, this is support because it's a high volume node. If I'm above a node, it's support. If it's above me, it's resistance. So I can look, and these are called distributions. They're a distribution of volume. And what they really are consolidations. You'll notice if the price gets too high, remember shopping, less buyers in the store for that $2 can of tuna. not paying that, but somebody needs it for the casserole, they're going to pay it. But basically, this is the retail price, right there. If it becomes too high, so I leave it. Why did I leave this price? Because it was too high. That's why. I'm not paying that. Get out of here. But you like to shop at the store, so you come back to the retail price. And if you think of this like shopping, then I can anticipate coming back here. And if I see it, then I have to ask myself, well, what has happened so far? Let's come back to the idea here. This is too high. I auctioned this and I left it. I'm not paying that. Get out of here. Now we've left this. So now I'm doing this. So my outside is up here somewhere, don't know. And then I have a retail price here. And if I'm below it, it might be too high. That's too high. Maybe this is too high over here. All these high volume nodes are support and resistance for me. Now, if this is support, but it's also the mean, which means the highest volume so far for the day, I can rotate across it and come to the outside. And then I'm either going to rotate back around again and keep doing this kind of stuff, or I'm going to break down. Now, there's more. We have a high probability stat at the ETH low, which we got over here. If you're in Trader Lab, that's a target. You could be flat, you could, be done, or you're going to wait now and see, is that the end of it? What happens when we counter rotate? Well, you get your answer right here. What happens here? You get a short here. And now let's just look at where our support is. I'm going to come to a different location. Now, right here, we got volume, don't we? Right there. Chop, 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 chop. This look familiar? Break high, test. Test. Chop, chop, chop. Break high. You see how you can use this? You can use this to do anything you want to do with it. But the thing is to be in alignment with it. And it doesn't mean, so let's say you're short biased based on the fact that we left this behind, okay? And we rejected this up here. So for me, I'm just saying, isn't it just a thought? Doesn't mean it's good. Shorts only today. And longs, which I see, this is a long, is a cover. So I see the trigger for the long. Well, I'm either trading the targets, which is what I do. I just look at statistics. Over 90% probability we take out the ETH high or low, past performance, not indicative future results. You have these stats if you're in TraderLab. Then that's it. Boom. And you can be done with the trade and ring the register or take your stop. So that trade could be over. But then if I know the trend is potentially down, and the reason I know it is because of this, notice how this, now we have a bell-shaped curve here, and the volume dries up as we come out here. So we've rejected this. So for me, it's shorts. So I'm on me. Now you, subject to your skill and your statistics, you could be long here, back to here, short from here, back to there. I can't flip quite that fast in this range. So I just kind of pick a side. So for me, it's shorts. But that is all because of what? Top of the stream. The market is long. There's sell stops in the market. Of course, there's FOMC. But putting that aside, technically, if we didn't have FOMC, this is the same trade I'd be taking, and that's shorts. So until it changes. So that's a short to there. And you could be taking this short to the support. You can come back up to resistance. You could take the short. See how this is working? And you get taken out here. Now, this was very interesting. We talked about this in TraderLab. Look where this liquidity comes into the book. It's like, what are you doing here? Hey, what are you doing? So this comes into the book, and that's important. Somebody maybe wants to put a lid. And what else do we know about this? Is this interesting? Right there, right at the high volume node. So I know now I have resistance up here, and I'm coming to an outside edge. this is mean reversion. So this, I mean, if we take this out, then everything changes and, take a stop like everybody else. That's not the point. When we come outside, I know this is too high unless we take it out. So I'm in this outside edge. And if I think I'm in rotational trade, which is called mean reversion, I'm going to fade this to come back here. And we talk about this one in Trader Lab. So let's watch. Here's resistance. And where am I going? Let's look. Buyers are here. Sellers are here. Break high. Going up. Buyers are here. Sellers are there. Break high. Going up. Watch. Buyers are here. Buyers are there. Micro volume is right here. And I'm going to the moon. Break low. What is this? I am below the buyer. I'm below the buyer. This is a trigger. Now, I have a couple things I can do with this. Of course, the idea is to try to get short. Let's look at the structure. Now, I call this microstructure, and it's fast, and it doesn't mean you can react to it. And when you're developing, you cannot react to it. But I want you to see how you might be able to start putting pieces together. And it takes time. In other words, you may see this trade, but not be able to do anything. It happens to me. I see a trade, and by the time I'm thinking about it, it's gone because I have to process it in my brain. And I'm not a computer. There's my trigger. Here's my test. If I get short, I'd probably be getting filled down here, and my stop is going to be up here. Now I'm trying to come here. Mean reversion. It's the same trades we've been talking about. There's my scale. Now I'm looking to come to the outside edge, which would be down here. Let's watch. So I show a process like this so you can get an idea of how the market works. Notice where the support is, you see? So you don't have to be trying to hit the ball out of the park. If you can organize the participant behavior on levels based on their behavior, not what you think, but what they say, and we can recognize where the behavior happened, we can just trade to these locations. And this location is at an outside edge. So we're trading around. This is called mean reversion. So for me, it's only shorts because I can't handle going both sides without getting a headache. So I pick a side. And I always say in Trader Lab, pick a side. Mean reversion. And where do we come back? Now, here may not be your trade. Let me show you the trigger. Where do we come? Where are we? Outside, high volume. Now it can go anywhere. And if this is not your trade, remember, this is not for you to be doing anything here. I get my buyer, I get my liquidity. So buyers are in control. Buyers are here. Sellers are there. Sellers are there. Buyers are here. Buyers are here. Buyers are there. Liquidity. No clue. Volume is here. Breakdown. When I'm below this guy and I'm under here, that's a trigger. You can put a short on here. You can use a limit order if you can handle it. Because I know a lot of us have FOMO and we're just going to click sell the market. You'll get filled maybe over here. But when you see the break, this is the trigger. The volume is right in here. Sellers are here, sellers are here. Now, I don't know that until this. Because now I'm below this. That's a trigger in the Trader Lab. Now I can lean against the volume here or sell it here or sell it there. Stop. Now, where am I trying to go? Now, at 9:30, I have a statistic called the IB stat, over 90% probability we take out either the first hour's high or low. Pick one. Well, based on the idea that maybe we're leaning south, and this is all posted in Trader Lab, we're looking for this. Notice what sits right here. Liquidity comes into the book. So here's what you would do. You would based on a 90% probability, past performance not indicative of future results, you'd be targeting this, or, and there's always more, or you're going to be targeting this. This is an outside edge in a higher time frame as you think of them. And then this is an outside edge out here in the next higher time frame. So we have a high time frame, which is wherever the S&P has been on the planet, call that the high time frame. We have an intermediate time frame. That's this level. These are outside edges. So it's the same as this, except in much higher time frame. This is developing daily. So when I think of this, I think of fractals. So we're trading the microstructures in this time frame as day traders, but it's all overlaid on higher time frames, which is this and this. So, and this is a target. So you could either scale here, be out, or hold and manage your trade. Let's watch. Let's look at this. So, too high, too low, don't know, rotation, microstructure, trigger, short. Now, it's not a short. I'm showing you the structure for trade management. And then lower. Right here, no clue, because that's resistance. That's where the sellers were activated. You could see them, right? So I come back to resistance. This needs to hold right here. Okay? Right there. Break above it. Trade's over. Thanks for playing. This is when your broker sends you the gift basket. Watch. I think I'm going to jump to real time. I got about a half hour. And notice where we come back. This is still, now this is an aggressive trade, and we talked about this one in Trader Lab. This is high risk trade. And the reason is we are in two-sided trade. This, if you sell from here, and it's not that you can't, and I pointed this out in Trader Lab, it's that you're trading inside out in a mean reversion configuration, which is outside in. This is the inside. So this, not so much. Which doesn't mean it's going to go up, it's going to go down. What's it going to do? I don't know. If you're an aggressive trader, you could sell this. I'm just saying is it's not a trade I take. And it's not what happens, on one trade. It's what happens with all of them. Notice where we are. So this is why that trade, wherever it went, I think it was this, or no, maybe this one, can't remember, is a dangerous trade because of that. So, because that can happen at any time. And I think we're current, and I apologize for taking some time here. Now I'm going to look at your questions. How you guys doing? How are we doing in YouTube? Please give a like. Please give a thumb up. This is Auction Market Theory using a volume profile with structured trades that you can learn. There's no cost. It's in the Bookmap Discord Trader Lab community. It's a community of like-minded. Notice where we came. These are Trader Lab trades. We are still in a rotational configuration here. So let's look. I think we have VPOC shifted back up, right? Okay, at this point, there's really no reason to be doing anything. For me, I'd look at this and I go, well, I'm not a scalper. I put that idea away many years ago. I found, it's this thing about risk reward, Well, my risk is pretty constant. It's 2.5, maybe 3 points on an ES. I'd like to get 2 to 3, but it's very hard to get that. I mean, I do at times, but it's just that I'm still human, and for example, this sets up a selling structure. By the time I can react to it, I have to. If I was going to get short, it would be here. Because where'd the sellers take over? There. So I put a line here, and I come back and I have a limit order 1 tick, and that's kind of what I do, 1 tick in front of the level. let it pick me up. And then there's my rotation. The problem with this is the fair price now. Volume point of control. This is now fair. So if I'm trading outside in, this is mean reversion, but it's mean because there's really no range. So I can't trade it. I can read it. And now here's the differential with this. Once you learn this and you understand, the real thing with trading is understanding. It's not, and I understand, I got to tell you, we use our indicators to translate market behavior. I mean, that's why you got them. And we think that teaches us how to trade. It doesn't. It's just a translator. It has no concept of context or condition of the market. That's why when you curve fit and you get a running market, we get into a trend or an expansionary range expansion condition, indicators can work pretty well because it gets you on the right side eventually. And if the thing runs, it's like you're Houdini, you pull the rabbit out of the hat. But then you use the same process in this kind of condition and you get chopped up to pieces because it's lagging late. And when you're getting long, everybody else is maybe getting short, or you're at the end of the rotation. So you're curve fitting for something that is a minority of the time, which is range extension. The majority of the time, about 70% of the time, we're in this condition. So what are you solving for? And do you know the difference and how to trade the different conditions? And that's called context. You learn that in Trader Lab. But most of us, when we start out in trading, we're dependent on the indicators kind of doing, taking care of all this for us. But the indicators are not, they're dumb. They're not meant to do what we ask them to do. Okay. That's not what it's about. So if you can understand how the market works and anticipate behavior, you then might actually be able to use your indicators at the appropriate time aligned with the appropriate condition. But again, most retail traders never get that far because they run out of time and run out of dollars trying to curve fit the belief that indicators are the answer. And my philosophy, at least my experience from having coached many traders over many, many years, is that that's the problem, actually, not the solution. I'm going to show you a little picture of Trader Lab since there's no trade here right now, other than you can read it. So what I'm doing is when I'm sitting here, I'm looking at this, I am reading it. There's a short and there's the rotation. I need to train my mind to go, oh, there it is. And what else? It isn't just that this showed up. It's where it is. Location, location. Write that down. Think real estate. Location, location, location. And what do we know about this microstructure? Too high is right there. Where did we come? I'm just showing you. I can just pull this out of left field because this is the truth of the market. There's resistance. This buyer was absorbed. You see how it's going down? You can learn this. Now, it's not about predicting. I have no idea. And I'm proud to say I have no clue, because if I think I know, I've stepped into the realm of not being aligned with the business I'm in. We are in a gaming business, and it's the same as how casinos operate. And it's very important you understand this. As retail traders, we come into this with the belief that we need confirmation and to be right. Of course, you want to be right. But we're going to build something that confirms. So we're going to wait for confirmation. We're seeking certainty. And this is all psychological. It has nothing to do with the business. This has to do with the obstacles to being in this business. And that is a belief that you can squeeze out risk and create certainty. I tried that, and I did it with trading systems. To try to, and optimization and walk forward testing, all this stuff. And I did that because I said, well, maybe if I put more together, conditional statements with a lot of math and a lot of processes, I can optimize these together and then do walk forward testing, prove that it works, and then go into the market with it. And I did that for a number of years. And I would have strings of winners just like you do. Anybody can have a winning trade. I hope you understand. Uh, the the illusion of profitability is randomness. So we all have winning trades. We even have runs of winning trades. And we go, I got it now. And then it starts breaking down. And you go, let me get that screwdriver out and let me tune and tweak. That's what optimization is. The other term for optimization is curve fitting. And whether you're doing it with an indicator or I do it with a trading system, the net result is the same. That is trying to put the market in a box and then thinking somehow that it's going to repeat itself over and over and over again. It does not work that way because it's always changing. Aspects of it repeat, and you can teach yourself to recognize it, but we can't force the market to do what we want it to do because then we're seeking certainty. The casinos have approached it a different way, and they're very successful. They accept 100% uncertainty. What is not uncertain is how they play their games. They have anchored inputs. So a setup or a structured trade is based on anchored inputs. So when it shows up, you show up, you put the trade on, and then it's random as far as the outcome of that specific individual trade. So at the best, it's 50-50 on that one trade. But just like the casinos, they have runs of winners, they have runs of losers, but because they play the game with anchored inputs, over time they extract the dollars from the gamblers in a random environment. We're in the same environment. It's 100% random. So our nature is to solve, to create certainty, but we're in an environment where it doesn't exist. So what the Trader Lab is about is helping you understand where you are, where you're trying to build a business, and what the elements are to function here and develop a business. To understand that you're in a random environment and your efforts to squeeze risk out and create certainty don't exist here. What does exist here is the ability to create a statistical edge. And now you're sitting on the side with the casinos who only play games that have a statistical edge. That's what the Trader Lab is. And you're invited to the Trader Lab. If you've been trading and you're waking up with Trader Groundhog Day, which is what I did a webinar on that, because that was me, working hard. And I mean hard, I mean years worth of hard. And ultimately, in spite of success and runs, coming back to the same place. And it was like, there's got to be something else. What am I missing? And this is in spite of, a lot of success along the way. I knew, because I kept seeing it happen over and over again, that I was trying to get a process to work. Let me see if I can get this here. I'm having a hard time with this. Hold on. I want to show you. This is the Trader Lab community. There's a lot going on in here. You're all welcome to it. It's very interactive, a lot of support, a lot of cross-pollination and education. I'm in here all the time. Talk about inputs and context. You can see me. I talk about statistics. I'm very active in here. It's a kind of a cross-pollinating coaching. It's like being on a virtual trade desk. Maybe that's a way to think about it. Because when I was sitting on trade desk and I work with other traders, this is kind of what I was doing. I'd say, well, what's going on here? What's the conditions of the market? Why would you take a long? Why would you take a short? What's the problem with the trade? What? So here, day trading, fantasy or reality. Are you a trader or a gambler? Why most traders using indicators fail? Are you trapped in Trader Groundhog Day? That's me. That's you too. You wake up, you're working hard, you're spending all these hours, you're tuning, tweaking, you think you finally got it, you get excited, you go in the market, and then bam. What happened? Order flow and volume profile, see them together. High volatility reports, gaps, trends, advanced user session. Now this is really important, number 12. How your pre-market plan creates a trading edge. It's a 3-part webinar. So you're talking, I do an hour and a half. So you're talking, about 4 hours of plan. deep dive into this. So there's a lot of stuff here, and psychological areas to this. Psychology is, I think, the biggest obstacle. Everybody's looking for the Holy Grail. I'm going to tell you, it's not the Holy Grail. It's your psychology is where the problem lies, in my opinion. Being able to execute it because you're fearful. You're wired to avoid risk. I mean, that's our primal wiring, our reptilian brain, right? Well, if you're wired to avoid risk, then what happens when you have to face risk? Oh, I got to put a trade on. What do? I want certainty. Isn't that right? Well, that's what you want. Well, guess what? It doesn't exist. So if it doesn't exist in spite of what you want, you think then you have to put aside what you want and work with what you have. What you have is a random environment that is 100% random. Now, this is a short, right? And it's all location based. Now, a day like today has a lot of rotation, so you'd be pretty active going, working in the range that's available. And you can do pretty well on a day like this if you have an edge and you know how to manage yourself and manage your trades. Yesterday, we didn't have a lot of trades. Yesterday, it was huge moves, but the trades, we had a long near the low of the day, and we had a couple other trades. We had a short in the morning. Short down towards the low of the day, long, and then a couple continuation trades. Huge range, 20, 30-point trades, not a lot of them because the market was directional. Today, we're in a different condition, so the market's it has somewhat of a direction, but it's really rotational. So it's kind of leaning to the south side, but all we're doing is trading this. Does that make sense, guys? And do you have questions? So this is the Trader Lab. Unfortunately, guys, in trading, no silver bullet, no Holy Grail. You go out on the internet and I just see the stuff. The only thing you need is this or that, supply demand zones. There's all this stuff. All this stuff has been around since, sandals were high tech. There's nothing new. There's derivatives of old stuff that's repackaged. There is nothing new. I can assure you that. If there is, I'm sure, yeah. I'm sure there is something new and I don't know about it, but they're derivative. AI is the big thing. And the marketers jump out there with AI to lure you in there. It's just garbage. Now, maybe someday AI will actually be something here that we have to, we may use it as a tool. There's other elements involved. But right now, the human mind processes better than AI. Okay, now that may change in the future, but it's going to offset itself because everybody will use the same thing and it kind of nulls the other side, So I've seen innovation, come, I saw indicators come and I saw what happened with those. I've seen, we have Fibonacci, we got Elliott Wave, we got Gann. You keep going, we got them. We got Keltner channels, VWAPs, this stuff's been around forever. And everybody tries different derivatives and repackages it, but you still got to do the same thing in the end. You got to understand how the market works. You got to deal with your psychology. You got to know where you're going to trade. You got to know the condition of the market. And you have to be able to respond. So that doesn't change. When trading systems first became available, and you could process the math with computers, that was the cutting edge. So I built systems. It was not the answer. And it doesn't mean you can't create a system. But what I find is my mind and yours is a much better processor in that it isn't the math of lagging indicators that are now in a computer program. It is the behavior of the participants, not lagging mathematical measurements. It's what's right here that would get you short. I hope that makes sense. and I really have to always say I'm not against indicators. It probably sounds like I am. Uh, what I found with a lot of traders I work with over the years was that everybody starts out thinking that it's about an indicator-based business. So they kind of put their energy in, open up your software toolbox. I can't open mine right now, but it's probably got about 100 or so indicators in it. And that's like you could spend your life mixing and matching. I mean, it's an infinite number, isn't it? So that's what most retail traders do. It's like, oh, look at all these great things, and let's put that on a chart. Yeah, it touched this over there and it did that. Yeah, but that doesn't mean you can use it or that it even has an edge. Because if you had no indicators, even no charts, and you just push buy, sell, you're going to have winning trades. That should tell you something about the environment you're in. Hope it does, and I hope you're getting something from visiting Trader Lab today in YouTube. And if you find this interesting and you're waking up with Trader Groundhog Day, you might want to stop by the Trader Lab. You can use that link in the bottom of YouTube. And I do suggest you watch the primer webinar first. It's a high-level overview. It's about an hour, and it's got over 31,000 views. And then go down the list in the library, but join the community. And there's no cost for that, and then you can access all the resources. And not only the Trader Lab, but in the Bookmap Discord server, there's additional education. Of course, number one, with a high-tier order flow tool like Bookmap, I mean, really, you want to see inside what's happening. This is what you need as a tool, and I do, because I'm not waiting for something to cross over, wherever that might be. I want to enter here or there, okay? I can't do that using lagging indicators. There's also additional education: stocks, options, crypto, market maker behavior, swing trading, and a lot more. How to use the more sophisticated tools in Bookmap, and all of there's no cost for any of this. So remember, this is our last short. And where's our outside target? Now we have to look here. Let's look at the volume right here. All I'm going to do is look at where the buyers were. These guys were absorbed, 170 stops. Thanks for playing. Limit icebergs, absorption, look at the buyers. So what is this? Might it be support? And let me draw a little box around here so I just, keep everything kind of organized here. Let me get over here. So we had support here. I've got to put it in here. So we got support there, and we got support here. Now, if you're coming down, subject to how you trade, you'd be managing your trade with these structures: trigger, resistance, high volume there. You're going for this. And all you're going to do, and I'm not saying you should do this, I'm just saying is it's a way you can learn. Micro high volume is here, too high, break low. Here, the buyers, I'm below the buyers. What now? Too high. Manage the trade. And you're going to get taken out. Don't think you won't. So it's not about getting the full move. Where is the end of this rotation? I'm only going to know when you know, which is in hindsight. So since I'm not dealing in prediction, I'm dealing in alignment. Buyers are here, sellers are here. If we get above this buyer, then this trade might be done. It doesn't have to be anything more than that. I mean, does this work for you? This is the Trader Lab. It's almost a 10-point trade, so you don't get 10 points. So maybe you get 8 and a scale. It's a 10-point trade or whatever, if that's your plan. So let's see what it does. So for me, trade management, I know the market is short. Remember how the rotations work. I'm going to rotate back on it at some point. This is balanced trading. It's two-sided trade. So I'm looking for down here. I'm managing my trade with these fractals. Outside edge now is there. And this is very micro. This is like, being in here with the electron microscope. You can learn this if you're interested in it. Because in my world, I just want to get I want to ring the register. I'm not trying to hit the ball out of the park because I don't know where the fence is. And of course, I got FOMC, so, So where's my support? It's here, and there's another. Here, let me show you. The outside edge is there. Watch. So this is an outside edge. I'm going to put a little line here. I know there's a lot of lines. So this is an outside edge. This is support. So let's watch it. Watch it. So here I'm my finger's on the the eject button down in here. Not a recommendation if anybody is short in TraderLab. I'm just going to show you structure. This is remember, we were going mean reversion, which is to come all the way around, and this is the outside edge, and this was too low. Let's watch the behavior. Let's see what happens. Now, I'm not in the business of predicting. It could make a new low, no, nothing says it won't. Let's watch. Buyers are here. Sellers are there. This is my outside edge. Now, here's an interesting thought for you. Is there any reason you wouldn't have a limit order sitting down here and you just take a profit and forget it? Or, and here's the or you are managing the trade and you're willing to give back some open trade equity for the possibility of continuing lower, because that's the only choices you have here. It's either trade management and get taken out and give a little back, or target right there with a limit order, one tick above, and that's it. That's your choice. And there's no right answer. The answer is built into your trade plan, and you know what you will do before we ever get here. Because that's the business of trading, is trade plan. Most retail traders are kind of flying by the seat of your pants. If your pilot did that when you were going cross country, you wouldn't be too happy about it. Retail traders tend to make it up as they go. That will not, in my opinion, give you longevity. Longevity comes from consistency, because you're in a random environment. Remember, something needs to be anchored. The anchoring is what you do. So when you're here, you already know what you're going to do. You're either going to be exiting here because you've vetted this and you know market mechanics, or you're going to say, well, we might take the low of the day out, which is down here. And if we do, I'm willing to risk giving back some of this so I can hold my short. Isn't that all the only choices you have right here? Would you be taking a long here? I don't know. Me, not so much. Would I be holding a short here? Depends on the number of contracts. That's actually the way I do it. Not saying it's a good plan. What I do is I trade sequential targets. So I know this is very important right here. So that's why it's an exit. And then if I have a runner, I'm going, I see where I'm going here. Well, this is all pretty important. And this is important down here. This is another possible area. But this is my area. There's always possibilities, right? So, you got to live in the world of maybe, because that's all you got. Watch. And again, I don't predict. I don't want you to think I know what's going to happen. What's so important for us is to know you don't know what's going to happen. It creates fear, and it's liberating at the same time, because your job is not to be right or to predict. And most of us think, we start out, I know I did. When I started in the business, I learned classical bar charting at the CME, and that's all measured moves. So I thought, oh, okay. So I took that idea and I said, well, and so it's all about, it's going to go here, it's going to do that. There's that sense of certainty, like Well, you work with that for a while, and I mean a long while, and you start seeing that this head and shoulders and this triangle and this pennant and this and that and all that kind of stuff. Yeah, sometimes it does and sometimes it doesn't. Well, it's random like everything else. Does it actually have an edge? How about maybe not? But blindly, we accept certain things. I found I couldn't accept anything. So I had to find out for myself. And that meant dead ends, years of work, and waking up with Trader Groundhog Day because I didn't understand why things didn't work. Why did I have all these indicators? And why did they work at times? You see? So that was the dilemma for me. I said, well, it must be me. Well, it really wasn't. But I didn't know that. And again, I'm only talking about me. I'm not talking about you. But if it sounds like you, I've walked in your shoes and you're walking, where I've been, then you might want to think about it. And are you going to wake up again with Trader Groundhog Day? So you see what we have. You could be done with this trade right here, or you're managing it. You see this volume? Break low. The sellers are here. The sellers are here. That's why I was saying it's either going to do or that, right? Did I know? Nope. Do I have to know? How about this? I can't know. So if I can't know, I'm not going to solve for what I know I don't know or can't know. This is also a possible target down here. And this. And again, not a recommendation, just saying. Are you guys with me? Carlo, there's a link in the bottom of YouTube. You'll see it's a link to the Bookmap Discord Trader Lab community. You have to, you click on the link, you're going to have to verify your Discord username and email to make sure, it keeps the spam out. So no offense to anybody. And then you would join. And that's it. There's no cost. And then you come to the Bookmap Discord Trader Lab community, say hi, and we will direct you to where the resources are. 60 PDFs of these structured trades. So you just see them and reverse engineer them. The library of webinars, which I suggest you watch, and there's a number of years worth of them, but really it's the interaction in the community where you're going to learn a lot, because there's a lot of questions being asked, trades being posted, conversations about what's happening, and different approaches. It's not just this, what I do. But if you understand how the market works, I think you can go pretty far in potentially developing the business of trading. And because you need to understand the business you're in, and most of us don't when we start out. We're really misdirected by the YouTubers and the Instagrammers and all that, Twitters, tweeters, all that, because we're overloaded with information. When I started, there was no information. I had the opposite problem. There's nothing. You bought a book or you went to a seminar. That was it. You guys are at the opposite extreme. Anybody can do anything, right? So you have to kind of find what resonates with you, but you got to vet it for yourself. You come to the Trader Lab, you got to do the work, you got to vet it. It's not for everybody. Trader Lab's not for everybody. Being in this business is not for everybody. It's going to require more of you than you've ever imagined, because you've never experienced operating in complete randomness. And it messes with your psychology beyond anything you can imagine. It takes more than willpower to overcome your fear and your compulsions. It takes much more than that. You can obtain that if you understand the business you're in, and we do that with metrics. In other words, the same way the casinos operate, metrics. It's called edge. If you have an edge, it becomes tangible. That means you know what you will do ahead of time when the condition shows up. And because you've kept records and you have statistics, you know that over a random distribution of outcomes or a large sample size that you extract dollars from the other participants, even though you pay them along the way. How come the casinos can pay the gamblers, give you the cocktails and the ticket to the buffet and maybe tickets to see Adele, and they still make a terrific profit? Have you ever thought about it? It's because they only play games that have anchored inputs and have an edge. If you're interested in that, use the link in the bottom of YouTube, visit the Trader Lab, and join a great community. And there's no cost, and I look forward to meeting you there. Thanks, everybody, for visiting the Trader Lab. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, screenshot, and build out your trade plan and continually develop your understanding of how the market works, why it does what it does, and how to get in alignment with it with a structured, vetted trade plan. Thumb up in YouTube on the way out. Thanks again, everybody. Look forward to seeing you soon.